Hi there, welcome to another weekly general update for the 21st and 22nd of January. We've certainly had some very interesting things happen in the market in the last week, and I want to go through those both in terms of the US stock market and also precious metals as well. So some big moves and probably some confirmations as well. So this is a pretty pivotal week that I think that we're just going into now. So before we get started, just a general reminder on the fact that this is general advice only. So a bit of a summary of the action for the week. The S&P finished 26 points higher, which was quite a positive move, and the key thing about that is that that really does confirm the breakout from that triangle that we've been stuck in for about 4 or 5 months. In the very short term, the index is overbought, so I wouldn't be surprised in the next couple of days if we get a little bit more of a pullback, but I think the direction now is probably up. This is a seasonally weak time of the year, the second couple of weeks of January. The reason that is the case is because there's a pretty regular pattern that occurs, and that's that the market goes up into the first 7 to 10 days of the US earnings season, which started about 8 to 10 days ago, and then weakens off after that. So we're in that period now. But opposing that, we've actually got some pretty good upward momentum in the market. So we've got these two dynamics that are opposing each other at the moment. The US dollar index has been pushing up strongly as the euro has fallen, and short term it looks to be unwinding, and that's good for stocks. US dollar down, stocks up, commodities up. Whether we've actually got a more permanent reversal, or whether we're just going into a bit of a shorter term pullback and then moving on from there into a continuation of the trend, we'll have to wait and see. The ASX 200 rose 48 points, or 1.2% for the week, which was less than the S&P. So still really no confirmed breakout in the Aussie market yet. Now the big mover on Friday night was silver. It was up 5%. It all occurred in the last 3 or 4 hours of trading. So I haven't been able to find any particular reason for that. It was just a very big move into the close of the session. Gold also rose by another $26, but there's still really no breakout confirmation on gold. And I still think that 1445 is possible, but the case seems to be getting stronger and stronger. So I got that pop up. So just some general comment. The real challenge of trading over the last 6 months, and I suspect will continue into the future, is that the frequency of what I call 90% days on the SPX, which is the S&P 500 index. And what I mean by a 90% day is that 90% of the stocks or more are rising, as opposed to stocks that are falling. It used to be a fairly infrequent event. In fact, it used to be a pretty rare event, but now it's becoming very commonplace. In 2006, there were 14 days when it happened. 2007, 23 days. 2008, 39 days. 2010, 44 days. And last year, we had 58 days where 90% or more of stocks rose. Now, what that's telling you is that increasingly stocks are all starting to move in unison, whereas in the past, we could have trades going up, trades going down at the same time. But now we're getting markets moving together in unison a lot more, and that makes trading a bit more challenging. There is more of a correlation, I guess, on the short-term direction of the market. It just makes trading that much more difficult. And of course, it's been extremely volatile as well. We've had a huge increase in the number of 200, 300, 400 point moves in the Dow Jones. The other challenge of current day trading is that we've seen gold and silver do really well over the last couple of years, but there's been a huge disconnect between gold and silver stocks and the respective commodity prices. So that's made life interesting. So what works now? To me, we need to be, the opportunities are still there. There are some difficulties, but the opportunities are there to offset that, as long as we remain focused on buying and selling from points of extension away from the mean. So this is what is called a mean reversion trade. So prices get extended to the upside and the downside away from the moving averages, and they will have a tendency to reverse. And if you're really clear and ordered in the way that you're analysing the market, then those reversal points start to become pretty obvious when you really go out looking for them. The other trade in general that's working really well now is buying the mean in an uptrend. So again, prices in strong uptrends or strong downtrends do tend to resume to the mean before they take off again. So it's really buying those dips and rallies to the mean. So there are a couple of things that are working really well. Just a couple of comments on precious metals. The case for gold, and I'm talking big picture here, so 6 months, 12 months, and into the future beyond that. But the case for gold to rocket well beyond $2,000 is just getting rapidly stronger. It really is, and I think in the next month or two we're going to see that really start to accelerate. There's no question in my mind that there's a fair amount of manipulation occurring by central banks and governments to hold the paper price of gold down. But when you look at the real supply and demand situation for gold and silver, it's tight and it's set to become a real squeeze, I believe, throughout the remainder of this year. So my view of gold, despite the fact that it hasn't really fired back up again yet, is just get stronger and stronger. I've not changed my view. In fact, I've really reinforced my view about gold and ultimately gold stocks. I think once it does start to take off, because there is such a squeeze in the physical market, that I think we're going to see gold and silver move very, very quickly once that process starts. The movement in silver, of course, will be even more explosive because the silver market is just so much smaller, and the demand there is just going to completely overwhelm the silver market. Stock prices will eventually join in. We are going to see huge gains. I think I'm 100% certain that's going to occur. It's taking longer than I would have expected, and there is a bit of a dynamic happening at the moment which we need to pay attention to, but it is going to happen. Now, this is the 10-year Italian bond yield, which is very important. Anything above 7 and rising is really bad news for stocks, but as you can see in the last week and a bit, the 10-year Italian bond yield really has come down quite sharply. So that's a positive, and it's one of the reasons that the US stock market has been moving higher. So to summarise the actions to take in gold, there is a big divergence between the performance of gold stocks in the US and the gold price, and that divergence is a bit of a worry, so I'm still a bit cautious. However, selected Aussie producers are still pretty buoyant. There's a handful of stocks that are still really going extremely well. With stocks in general, I'm now looking to increase our overall exposure. Now that we've got this breakout in the S&P, I'm looking to buy reversals from oversold if at all possible, and if not, buy the small pullbacks after a positive upward move if we can't get an oversold condition. So let's move over to the charts and have a look. This is the US dollar index. So this is against a basket of currencies, and this is on a weekly chart. You can see that we've moved up fairly strongly. We were trading down around 73 or so in September of last year. We've moved up. We've gone beyond the 50% level. Haven't quite made the 61.8 yet. There's been a bit of a turn down. I'm still neutral in view as to whether this is a more significant turn down or whether it's just a bit of a pullback to the averages, and then we're still heading up to either 82.5 or indeed 88, in which case that would not be good for stocks. That's not a scenario that would be positive for stocks at all. US dollar index was overbought in the short term, so a pullback is not surprising at all. Let's have a look at the S&P, and we'll look at this on a weekly chart. So here's the weekly chart. We've got this big triangle that had been forming since back here in July of last year, and you can see that we finally broke clear of that in the last week. So I think there's a very, very strong possibility now that we'll move initially to this probably 1360, 1370 area. Beyond that, we've probably got a bit more resistance up here around 1440, and with the possibility, if things really fired up in the US, that we could see stocks up at 1550. So they're the targets. On a weekly basis, we're not overbought yet, so there is still plenty of room to move. But in the short term, if we have a look at a daily chart, on the daily you can see we are overbought in the short term, so a pullback to the moving averages would kind of make sense. So I think we might see that over the next couple of days. Let's just have a look at the Australian market, which has really been lagging. So this is the Aussie index on a weekly chart. So you can see we're really still trapped in the triangle here. We haven't broken out as the US market has, but I suspect that we probably will fairly shortly. So look for a breakout in the US market, in the Australian market, probably in the not too distant future, if not this week coming. Now let's have a look at gold and silver. First of all, we'll look at gold on a weekly basis. So we've been looking at this particular chart now for some time, and you can see that on a weekly basis we've held that upsloping trend line, and we've had 3 good weeks up, but we're still not yet back up above the 150-day or 30-week moving average. The momentum indicators are sitting about neutral at the moment, so we can't actually decipher a lot from that, but 1446 down here is still possible. It could still have one final push down, but I think that would set up one of the great buying opportunities for precious metals, and probably precious metal stocks as well. And maybe that's the reason behind the fact that precious metal stocks have not really joined in the rally yet on a global basis, that maybe there is an expectation that we've still got one final leg down in gold. Let's have a look at silver. This is silver on a daily chart. You can see the big spike we had on Friday. So looking quite positive there. Now the other thing that I wanted to look at was just what's happening with the gold stocks in America. This is what's called the Gold Miners ETF. So it's basically an exchange traded fund that reflects the prices of the gold majors in America. So we'll look first of all on a weekly view, and you can see on a weekly view that clearly the gold stocks are actually in downtrend, whereas gold has been rising. So whichever way you look at it, there's been a massive divergence between the gold stocks and the performance of gold itself. And it's really whilst it's at a relatively low level, there's no real signs yet of it turning up. Now the other index which reflects perhaps more of the stocks that we trade here, and that's the Junior Gold Miners Index in the States. There's not enough data there to really look at a weekly chart, so we'll just have to look at a daily chart. But you can see the same pattern. 150-day moving average is pointing down. The price is significantly below that moving average, and it's not really showing any signs of firing up yet. So that's just a bit of a cautionary word on the gold stocks in Australia. There's been some that have done really well, but generally there's still a bit of a drag. So looking to increase our exposure there, but we need to do so judiciously. So that's it for this week. I think we've probably just seen quite a pivotal week last week in markets, and I think over the next couple of weeks we're going to see some more volatility and probably the start of some pretty good moves. So getting pretty excited about the period that we're going into now. So that's it for this week. Cheers.